What if I told you there's an energy crisis brewing right under our noses? One that threatens the very foundation accelerating tech, the AI revolution, manufacturing comeback, and digital economy. In 2023, after 25 years of minimal growth, US power demand suddenly jumped 50%, then another 300% in 2024, and is projected to stay at these elevated levels through at least 2030. The result? Skyrocketing electricity prices hitting all-time highs, and something far more concerning, we're literally running out of power. This crisis requires immediate solutions as industries can't afford to wait. Where is it going to come from? One of the answers might surprise you, especially if you've heard about solar's troubled past. After decades of false starts and bankruptcies, solar energy has reached its inflection point. Why? Because the economics have completely transformed. Since 2010, solar's cost has dropped an astounding 70%, with another 21% drop in 2024 alone. What was once the most expensive form of energy has suddenly become one of the cheapest. Here's how solar could become big tech's secret source. It's not just eco-warriors installing solar panels on their roofs. Big tech giants are installing them in their back gardens too. By 2026, electricity demand from data centers, AI usage, and cryptocurrency could equal Japan's entire consumption. This creates two critical challenges for tech companies: finding enough power to keep operations running, and two, meeting increasingly stringent net zero emission targets. This explains why solar is gaining momentum. In Q3 of 2024, solar power accounted for 64% of new electricity generating capacity in the US. The technology has matured exactly when the market needs it most, and corporate America is taking note. SolarBank, ticker symbol SUUN, is an independent power producer that we're profiling, and it's equipped to help these major companies achieve their connection goals. With 100 plus clean and renewable power plants under management, SolarBank's already helped names like Honeywell transform industrial wastelands into thriving solar farms. As coal's energy share dwindles, the world is lining up around the sun. Around the globe, we're seeing electricity generation from renewables like solar and wind eclipse output from traditional sources like coal. In many cases, they're actually cheaper too. Solar's popping up everywhere. Cemeteries in Europe are getting the solar panel treatment. Germany coined the word Balkonkraftwerk, meaning balcony power plant, to describe the millions of Germans putting solar on their balconies. In the US, renewables are forecast to supply 44% of electricity by 2050, and solar energy is set to produce half of that. As a solar developer and independent power producer, SolarBank is gearing up to play a role in the energy transition. With $10 million plus in annual recurring revenue under the Canadian government contracts, and 100 plus renewable power plants already under management, SolarBank wants to form the core of America's energy future. Okay, you ask, but what about the infamous duck curve problem? You've probably heard of the duck curve, the curve created by solar reducing the energy load during the day, but dying off just as energy needs spike and the sun sets. Until very recently, the duck curve has limited solar to only a small percentage of energy generation. But the duck curve has died, and BESS, or battery energy storage systems, killed it. Pair solar with batteries, and it forms something very neatly resembling baseload power, as you can see in the chart. Battery energy storage systems, or BESS, prices dropped 33% in 2024 alone, and will continue falling. When paired with solar, they create something resembling baseload power, reliable, clean energy 24/7. No wonder solar plus battery storage now represents the majority of new energy capacity in the US. SolarBank, ticker symbol SUUN, on the NASDAQ, is a company that's been quietly preparing for this moment for over a decade. Founded by Dr. Richard Liu, who cut his teeth at energy giants Enbridge and Toronto Hydro, SolarBank isn't your typical solar company. Instead of focusing on just one segment of the market, they've built a vertically integrated company that can generate profits from every link in the solar value chain. What makes SolarBank unique? They develop, engineer, construct, and operate solar projects, extracting value at every step, and they've proven their model works. Revenue doubled from $10 million to $19 million in fiscal 2023, then more than doubled again to $58 million in fiscal 2024. They've got a 100% client retention rate and a 100% project completion rate once construction begins. But here's where it gets truly exciting. SolarBank has now entered phase 4 of their master plan, becoming an independent power producer. Taking a page from Rolls-Royce's legendary Power by the Hour business model. They're transitioning from one-off project revenue to recurring revenue streams that could last decades. In July 2024, they acquired solar flow-through funds, instantly adding $10 million in recurring revenue through long-term government power purchase agreements. Their IPP portfolio now exceeds 30 megawatts with over $100 million in assets, generating approximately $15 million in revenue each year for the long term. And they're just getting started. With a massive pipeline of over 1 gigawatt of contracted solar projects, 162 megawatt hours of battery storage projects, all planned for execution in the next 3 to 5 years. They continue to announce project after project, adding to their vault. And most recently, amidst market turmoil, they were able to raise up to $19 million from a single investor. Dr. Liu has been vocal, saying, "We're focused on seizing opportunity, not playing it safe. The initial infusion of $8.5 million now, and potentially an additional $10.65 million if warrants are exercised, funds battery storage systems equipment and a community solar project in New York. Those are two fast-growing niches in an energy-starved world. More so, this financing is a show of support from Wall Street. The offering was with a single investor, a multi-billion-dollar global investment fund backed by a bulge bracket investment bank that has a large portfolio of energy investments. So who are the bulge bracket? These are the largest global banks and include Barclays, Bank of America, Citi, Goldman Sachs, JP Morgan, Morgan Stanley, and UBS. You can see a paradigm shift is here. Renewables are anticipated to outstrip coal in 2025, showing a cleaner future. By 2027, it may be lights out for old school power. The age of coal could be going dark while renewables take center stage, and solar is expected to lead the cast. You'll want a front row seat to this breakthrough, and with the stake in tomorrow's power, SolarBank investors are at the head of the line. With solar energy set to increase, now is a critical time to consider. As an established operator already powering 10,000 plus homes, plus corporate energy transition, SolarBank's Power by the Hour model is gaining momentum, with $58.4 million in revenue for fiscal year 2024. While SolarBank's growth trajectory is compelling, investors should carefully consider several risk factors. That said, SolarBank's decade-long track record demonstrates their ability to navigate these industry complexities. Their vertical integration model provides multiple revenue streams that helps mitigate these individual project risks, and it positions them to potentially capitalize on America's energy transformation. Thanks for watching. Check the description below for important disclosures and additional information on SolarBank Corporation. Thanks again for watching.